Karthik, good morning to you.
Hi Shweta, good morning.
Good news coming in there by the way of inflation, easing inflation in both food prices as well as fuel.
Absolutely. So I think we've had a good stroke of luck and I think some fairly robust measures taken by the central bank and the government. In tandem, they seem to have augured very well for the overall state of the economy that we see ourselves in today. And remember, what is happening in the world is to a large extent not really having a negative impact on India. Whether you look at the US economy, whether you look at Germany going down, all of Europe in a state of recession, UK not doing well at all. Despite that, India seems to be in a fairly comfortable position. And at 4.25% inflation, retail inflation, this is also referred to as a consumer price inflation, we seem to be almost at the verge of the RBI threshold of 4%.
Okay.
Now remember, RBI has a 4% threshold with a plus minus 2%. Inflation could go down up to 2%, which is healthy for the economy, or even up to 6%. But we are bang in the center at 4.25%, which I think is excellent news.
Right. But what I'm reading on month basis, the inflation, which is measured by CPI, as you pointed out, has gone up slightly, but that doesn't really matter, is it?
It doesn't matter. It doesn't matter. Primarily, I think what we are really looking at is RBI by way of increasing interest rates over the last full year successively, month on month, and taking what is referred to as a hawkish stance has paid off well. So now we have a situation that our price inflation is under check, it is under control. And thankfully, you know, it comes to a situation where hopefully in the next Monetary Policy Committee meeting that the RBI does, there should be no reason for any extended rate hike or even rate cut. So there's a possibility that RBI will maintain status quo when it comes to rates. Now, there are 2 or 3 elements here which could spoil the party as far as inflation is concerned. Number one, cereal prices continue to rise.
Right.
In addition to that, milk products, inflation on milk products is still high. In fact, sticky, it's been high for a while. And pulses. Now, cereal and pulses are very central, in addition to milk, to the overall diet of Indians. The diet chart includes these. So, on account of these, will there be an an undercut in supply with the demand still being intact, and is that going to shoot up prices? That is one index that we need to watch out for. In addition to that, the global cut in fuel production could also ramp up prices in the given future. So these are 2 elements that could perhaps spoil the inflation party for India.
And the fuel prices. Because
exactly.
And that's an important story because we talked about it yesterday, how you know, oil minister said that the ball of course is now in OMC's court to cut down fuel prices, but there is enough headroom to do that. They have been, you know, making some money as crude basket and the crude oil prices slumped over last 1 year. Crude prices, oil and petrol prices in India have remained stagnant. But if they were to come down, inflation will further come down.
Yeah, but I think which is why OMCs may be on tenterhooks right now, not to cut down on fuel prices immediately for 2 reasons. A, they are recouping the losses they have made on account of crude being high all of last year. And the second element here is that there is global production cut by the OPEC members yet again. So OPEC wants the fuel prices to be standardized, and by standardizing they mean, and stabilizing they mean at a higher scale.
Right.
Now we continue to be huge fuel importers. Even though a bulk of our fuel import now happens from Russia and we have the advantage of getting it at a cheaper price, but the vagaries of the fuel market globally with OPEC cutting production could impact overall crude and Brent prices, and that could have a further impact on fuel prices, taking fuel prices higher. So I think it doesn't make sense right now, given that we are also in an election year, for OMCs to be tempted or coerced into cutting fuel prices, and closer to elections, the fuel prices going higher, shooting up higher again. So that could further add to inflation woes rather than reduce them in the later part of the year.
Okay, quite interesting. You mentioned if they were to cut now, and let's say crude basket becomes more expensive in a couple of months from now, because OPEC countries are continuously cutting output in the hope that the prices, the pressure would be lifted,
the prices in their favor.
Prices, and the pressure would be lifted off the crude basket, which is still, by the way, trading at one of its lowest, approximately $75 per barrel, as we discussed yesterday. But if that were to happen, if the prices were to stabilize or go up slightly, OMCs would end up making losses yet again. So
That's right.
it makes more sense for OMCs to cut prices just
keep
close
keep
to elections.
status quo right now. Don't tinker around too much.
Right.
There is enough demand coming in by way of, mobility and other fuel demands. With the summer season approaching, power is going to, in any case, be in short supply.
I want to come to that because, just last week we heard Shaktikanta Das, after the RBI monetary policy, coming on record to say, although inflation is getting better, it is easing, it is still sticky. And he mentioned, and I quote, we need to keep an Arjuna's eye on inflation.
That's right.
Essentially, you have to be very hawkish about inflation.
Incidentally, Shaktikanta Das had also hinted on perhaps inflation surging a little, and the numbers that have come in are in clear defiance of what he had said. So, so I think it goes on to show that it's not just the monetary policy, it's also the fiscal policy, it is also the demand-supply equilibrium, which all works together to arrive at inflation numbers that the statistical offices release.
Right. And one thing that stood out in that press conference and about inflation in general, and that is how much can we control it by the way of tinkering monetary policy and what is not in our control. Certainly, a situation like El Nino will dampen sentiments.
Of course, you're right.
That is a possibility.
So in addition to cereal pulses, milk products and fuel, an El Nino event or a delayed monsoon is definitely another thing that could drive up prices by way of obviously farm produce getting cut down.
Okay. Rakesh is joining us at this point in time. Rakesh Khar with us on this bulletin. Rakesh, appreciate you taking time out. But, talking about inflation here, and then we discussed what could lead to a rise in inflation. But overall numbers here looking well for people in general. Inflation, or the mehengai as we call it, has been a big driving point, not just economically, but also politically.
Absolutely, Shweta. In 2013, when Modi made his first speech as Prime Minister, he remembered that famous song, Mehengai Dain Kha Gayi. So I think, at that point of time, inflation was very high and it suited him. But when you're in power for 9 years and, you're going to hit the elections in 2024, never be, complacent about inflation. It can hit you and surprise you and shock you and very easily become an election issue because, we do remember that BJP lost its Delhi Chief Minister Sushma Swaraj late, because of onion prices. So there is no control that any government can exercise for eternity when it comes to inflation. So I think broadly we have the indicators in place, but government of the day needs to be in absolutely control of the inflation. And in that sense, this 4.6% number is happy to go about. And what is important also is that, we put a stock limit after, I think, 13 years, 2008, 15 years on wheat, which means that this government is very, very sensitive. In fact, I felt it was unwarranted, but in its own calculations, it seems they believe that if wheat prices go up, it could become an election issue. There are 3 state elections and then also leading up to the general elections. So first time in 15 years, we have a wheat stock limit come into play. And that's when the MSP price has been increased. And overall, this government has a certain trajectory on agricultural reforms. We do believe that they'll also increase the cash subsidy they're giving to farmers on a quarterly basis. But given the political nature of inflation, it's something that everybody understands, and politicians of all hues are able to leverage it this way or the other way. So happy that they've taken cognizance of it. But control of food prices, especially milk, cereals, is something that we need to be really very, very conscious of.
Wheat prices, and that is another story that we're tracking. The centre seemed to have imposed a stock limit on wheat, and this is happening a very long time, essentially to arrest the rising prices of wheat, Karthik.
That's right. And like Rakesh mentioned, a higher MSP to farmers is obviously going to entail better income for the farm sector, which in itself is going to drive rural demand. And once it drives rural demand, there is an obvious upliftment in the economy overall. So I think, I don't know whether, whether setting a stock limit is a great idea or not. Rakesh might be able to educate us, a little better on that, because I feel as long as you let free markets operate, you will be at a better sort of control of where your real inflation figures need to be at and where your real demand-supply equilibrium needs to meet. But given it is election year, so limiting, the stock as well as increasing the MSP seem to be more electoral political reasons and stances rather than pure economic inflation attack, Rakesh, according to me. What do you think?
I personally have always been a vote to free market force when it comes to agriculture. If with this government with such a heavy mandate would not bring about any radical reform in agriculture, right from free, electricity, which is a big drain on the public exchequer. Uh, uh, it's taken the cautious route, which is not market friendly. In that sense, I would imagine that this putting a stock limit on wheat is not a great idea from pure economics play, but from politics, they're trying to hedge their bets against any potential risk. I mean, we do remember that successive governments, I think, have been, hoarding wheat at Food Corporation of India, and we don't have a back end supply chain management in terms of all that stock was free of, state.
Okay.
But it makes sense to, be very safe about having the stocks in place and having. The other challenge here for this government and any other government is that how do you enforce that black marketing doesn't happen? Because at the back end, even if you put massive curbs, it also leads to a very undue license charge and people, being attacked and people being, raided. But I think, given the sensitivity of the electoral mindset, they have played the safe bet. I personally would have imagined that this was unavoidable.
Okay, Rakesh, I envy you wherever you're standing, wherever you're sitting. It seems to be windy. It seems to be cooler than where we are at the moment.
I call it the winds of change. The winds of change.
The winds of
hopefully,
change.
it's not an El Nino event which is taking place right behind Rakesh right
Absolutely.
now.
I can see, but those winds of change are not impacting our political economy.
Okay, winds of change not really impacting political economy, but inflation, of course, remains a very important story, as Rakesh pointed out. It's not just economic story; it's a political story. It's a story that has led to change in governments, not just nationally, but also in states, specifically in Delhi, be it onion prices, potato prices, prices of pulses, wheat, all of that, of course, impacts a common man's pocket, their ability to spend, their ability to manage household. So in good news coming in there by the way of inflation, we'll keep a track on that story.